You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
Shares of Disney higher right now by 5.6%. This after the company reported better than expected earnings for its fiscal first quarter, issued an upbeat profit outlook for the year. That said, revenue did fall short of estimates, Carol. $23.5 billion for the period that ended in December and fell short of the $23.8 billion. That was the average of estimates from analysts compiled by Bloomberg.
Yeah, a bright spot was international parks. Man, there's so many moving parts, as it always is when it comes to the Disney world of Disney, if you will, Walt Disney Company. Hey, let's get to John Erlichman. He's an anchor with our Canadian partner, BNN. He joins us from Toronto. Why is this stock up 6% in your view, John? You've followed this company for a long time.
Well, I think at the end of the day, and we heard this leading into these quarterly results, Carol, there was a big circle around what kind of losses we'd see from the streaming business, right? We have very clearly shifted away from how many subscribers Disney Plus has to when that business will be profitable. And the fact that, there were some expectations this could be a very big money-losing quarter for Disney Plus, that it is still a money-losing operation, but much more muted compared to what we had been seeing, is a sign to Wall Street that at the end of the day, if their goal indeed is to at least be breaking even, if not being profitable with this business by the end of this calendar year, remember these are first quarter fiscal numbers for Disney, and they had previously talked about the goal of making the Disney Plus business profitable by the fourth quarter of 2024. This is a vote of confidence towards that goal. And at the end of the day, when you're being measured increasingly on the streaming side of the operations, remember Netflix just had a big quarter, 260 million subscribers, and a profitable business. Disney has prioritized that. That would probably be the biggest nugget here overall in terms of sending a message that the cost-cutting initiatives that have been in the works playing out, and particularly this prioritization of profitability for the streaming business, that it is more in sight today than it might have been, say, 3 months ago.
Hey, John, does this mean that the activists are done with Bob Iger at this point? It's kind of a facetious question, to be honest, but...
Yeah, I think at the end of the day, the bad blood between Nelson Peltz and Bob Iger is something that might go down to the wire. I mean, we'll obviously have to watch the headlines between now and presumably the April annual meeting. There are some activist I know there's a lot at this point. We can make a long list of activist investors who have said something or other about Disney. There are some who have actually been quite supportive of where the company is headed right now. But in terms of Trian and Disney, it may be very difficult to rectify, and ultimately will come down to the shareholder day, which gets back to what Carol was asking before. What is it that Wall Street likes about this quarter? If you can get to a point where you've got your parks business, which has generally speaking been doing well, I mean, that is a profit engine for them. If they're trying to find ways to shift away from broadcast to streaming for sports, as obviously that was the big news yesterday in the partnership with Fox and Discovery, and you can show a lot of progress on not just growing the subscriber base on Disney Plus, but stemming some of those losses, that might win over more investors heading into the annual meeting.
John, I just want to add a little bit more color into the report, because the stock continues to build momentum in the after hours. It's still up about 7.5%, so it's pretty much near its highs in the aftermarket. Bob Iger, of course, the CEO, once again at Disney, making some comments on a competing network, but talking about cost cutting impacting the bottom line dramatically. He said Disney may top $7.5 billion in cost cuts. Parks and resorts continue to do extremely well, and also talking about investing $1.5 billion in Fortnite maker Epic Games, which is interesting.
You know what's interesting about that, John? I mean, you can feel free to run with this, but think about the Epic Apple battle, but Iger's connection and Disney's connection with Apple. It's just interesting to see the strange bedfellows here.
if we wanted to go deep into speculative camp, since you've got analysts like Laura Martin at Needham, who for years now has been predicting a possible Apple-Disney deal, this would certainly be an interesting move if Disney is building bridges with Epic on the road to something else happening. I think what's interesting about this Epic investment by Disney, and look, we know Bob Iger has always been very strategic with investments, whether it was outright acquisitions or in this case an investment in Epic Games. Games was always a challenged spot for Disney. If you'll recall, they've had some starts and stops with moving into that area, but I think in the case of the fact that there have been those challenges between Epic and Apple, maybe that opens up a new opportunity. I think it also kind of gets your mind working in terms of what Disney is envisioning going forward. We've got clarity on the partnerships we'll see for sports and where people will be viewing that. We've got obviously the continued focus on streaming versus broadcast. And then in terms of the games universe, I mean, we just saw Apple launch the Vision Pro, which historically VR gear, even though Apple wants you to think about it as an everything product, I mean, there's been a lot of gaming that has lived inside the world of VR to date. You know, does Disney get to further explore worlds through games because the technology allows for that to happen? It would seem like that is at least part of the thinking here.
Hey, John, you know, in the press release, Bob Iger says, just 1 year ago, we outlined an ambitious plan to return the Walt Disney Company to a period of sustained growth and shareholder value creation. Our strong performance this past quarter demonstrates we have turned the corner. So based on what you are seeing here, do you agree with the analyst and investor community agree? Like, it'll be interesting to see what analysts weigh in tomorrow or tonight and whether or not we see upgrades, or more importantly, if they're raising the price target on this company.
It's always hard to tell with these initial reads, but it does feel like there's enough crowd-pleasing updates here that Disney will win over some of the analyst community. Look, Bob Iger is one of these executives that had such a long track record of success. You have to believe there is some goodwill on Wall Street, even though, let's face it, guys, this stock is still, I believe, 50% below that peak we saw a couple of years ago. I know it bounced off the lows of last year. You know, the fact that they boosted the dividend, I believe, by 50%. Remember, they had just brought that back last year. That had been suspended during the pandemic. The more shareholder-friendly moves that you make, this company has gone through so much cost cutting. That doesn't always culturally make people feel good inside the company, but there has been this very strong focus through Iger to get Wall Street back on board with the story, especially when you've got certain activists breathing down your neck.
Right.
That it does seem like the call it 6.5–7% move we're seeing in the stock right now would likely be paralleled by some positive analyst commentary, but we'll see.
And you're right about Disney. It is still down 50% from its high back in March 8th of 2021. So some ground to get back there. John Erlichman, thank you so much joining us there from Toronto, our Canadian partner BNN. So we thank John for that. PayPal.
Yeah, shares lower in the after hours by about 0.8%. Fourth quarter total payment volume coming in above estimates, $409.83 billion versus estimates of $403.6 billion. The company sees 2024 adjusted EPS coming in below estimates at $5.10. Estimates are for $5.49, Carol.
Yeah, so expects earnings to be flat this year. It's going to continue cutting costs and the streamlining, I should say, of their businesses. So continuing to track that one as well. Just looking at PayPal, it is down now about 5% in the aftermarket. Meantime, Disney is up about 6.5%. You're listening and watching Bloomberg Businessweek.